If we look back at Bitcoin's historic local highs here, 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 and here last month, what we can see is if we put a line of best fit across all these points, is that as time goes by, Bitcoin's rate of price increase is actually decreasing. In 2013, we got a parabolic overshoot above the stock to flow prediction. In 2017, we got a parabolic overshoot above what the stock to flow was suggesting. But in this cycle, there is no overshoot above what the stock to flow is suggesting. And each parabolic overshoot reduces over time to non-existent. So unless we get a massive decrease and a bear market in this coming few months, then it's very likely we'll get a transient Bitcoin price where we're ending the year around $85,000 per Bitcoin. Hi, this is Jason, and today's date is the 23rd of May 2021. So if you haven't seen my previous video on stock to flow model on Bitcoin, watch that first before watching this, as it defines a lot of the basics and fundamentals that we see here. The purpose of this video is to further analyze the stock to flow, but also hypothesize my thoughts in the number one, the end of year price prediction, and number two, how the dynamic of the Bitcoin price might be changing for the future and not seeing the parabolic moves that we've seen in the past. So to do this, we have to consider the local highs. So we have one here, we have one here, we have one here, and we had one last month, April, given where May is at now. So what I want to do is take the point of the first one and the last one, and we can extrapolate, essentially trying to touch the tops of the previous one. So roughly here, it can be adjusted a bit, but you get the picture. So what this is showing is as time goes by, Bitcoin's rate of increase in price decreases. And bearing in mind, this is logarithmic scale, not absolute prices. So this is not that extraordinary, because generally with assets, new ones, the ones that are immature, they tend to have more volatility, they tend to have more risk, and as a result, they tend to have larger growth rates or return potentials. And that's essentially what we see with altcoins due to the market cap. But here, based on the lines we've fitted on, based on the local highs, we are seeing the rate of growth decrease. So highest in the first cycle, then it reduces, and then it reduces. So the gradient decreases essentially. Now, where we're at the moment is, as mentioned in the previous video, we want to finish above 29,000, and also with subsequent months as well. We don't want to fall below that. And what we can see based on previous cycles is, again, marked here, the halvening happening and the stock to flow increasing, and then price following to try and match stock to flow, and then we'll get this parabolic run up. Again, last cycle, halvening, stock to flow increases, price responds, parabolic overshoot, top out. And then in this cycle, what we see here is halvening, stock to flow increases, and then we have price increase, and then to match essentially the stock to flow. But in recent month of May, we've seen a departure from that. We just need to stay above the 29,000, otherwise we might go into a bear market. Now, what I want to show that I think is very important is these parabolic jumps here, here, and potentially what I'm hypothesizing is we might not see that anymore, at least not in this cycle. Why? Because this goes back to this line, which is based on the local tops, and then we have the stock to flow, which is an expected value of what Bitcoin price should be, and then we have the actual price. And we see here we get the biggest parabolic pump out of all the cycles, and then the next cycle, this parabolic part reduces. So when I say parabolic, I'm just looking at where price is higher than what the stock to flow is suggesting. so the overshoot. But with this current cycle, there is no room to overshoot because you see the stock to flow line is equalizing this line that shows the line of best fit of the local tops. So that gives it smaller room to play with. And my hypothesis is that we won't see much of this parabolic movement anymore because there's no space for that now. We could break it, of course. A model is a model. No model is right, or all models are wrong. There's some that are less wrong than others, essentially. That's what we say in the statistical economics world. But what I want to do is extrapolate this line. So let's just assume that April was a local top, and we have based this series on local tops. So essentially what we can do is extrapolate that. We can try and stay on that local top of April. So this is roughly where we go based on the lines are crossing the local tops. So essentially my prediction by the end of the year is around $85,000 per Bitcoin, so long as we stay above this 29,000. So what this shows is, yes, based on what we see, the overshoot reduces, and there's no more overshoot. And in the future, what could happen is the stock to flow and the price and this series that has been created, they will stay relatively close. And that goes back to the rhetoric that Bitcoin is a maturing asset. So it is no longer overshooting as much as it used to in the past. And if you look at the first cycle, we had an overshoot here, and we have an overshoot here. Second cycle is just one overshoot. In this current cycle, we barely had overshoot, maybe a little bit here due to the COVID situation and recovery, but we haven't really had the same extent of overshoot that we've seen in the past. And we have a smaller space to play with. So as mentioned, 29,000 is significant. And then we have this line which is significant, and then the stock to flow will roughly follow that. So it's tighter spaces, which means less volatility in percentage terms compared to what we saw in the early days. So my hypothesis is that yeah, we'll stick very close to this. But the fact of the matter is, from what we have observed so far, based on this line, is that the gradient decreases with each cycle, which means the rate of increase in price decreases. So we might be seeing a more transient Bitcoin price going forward and less of these crazy parabolic runs. What could happen is if we break below 29,000, maybe we consolidate very, very rare scenario, and we consolidate around 10k, for instance, then we could get a parabolic run back up in order to fill that gap. But at the moment, what I'm looking at is essentially this area above 29,000, a very critical area, and just a space to play around with, and the future of Bitcoin price to stay more with this line. That does not mean that in absolute terms it doesn't go higher, because it does, but the rate at which on the logarithmic scale it certainly diminishes. So if we keep on following this, let's say maybe going into the year 2022, for instance. So right, computer's lagging, but anyway, you can see 2022. So yeah, it could be that our bear scenarios reduce and our bull scenarios is moderated. So for instance, if we're more transient, then let's say at the end of 2022 we could get $130 Bitcoin. So it could be that we're more limited to the upside, but at the same time we could be limited to the downside, and Bitcoin is more transient as a result. So I hope that makes sense. It's just a hypothesis. It might not necessarily happen. If it does happen, then it takes a longer time to get to $1 million Bitcoin. But I think it sounds sensible, because we're not going to get like massive multiple factor moves anymore as much as we did in the past. And that's just how assets go. Of course, Bitcoin's slightly different with its rate of supply decreasing every 4 years, but this line does factor that into account. So yeah, take that with a pinch of salt, but would be interesting to hear your comments on it as well, and your feedback. So leave it in the comment section, and otherwise I'll see you in the next video very soon.